Traders are always also awaiting the Fed minutes, while global markets mostly held gains despite copper and pharma tariff threats. But let's go back quickly and talk to Caleb Alimi and to see what he has to tell us about what's happening. Because today there's going to be an NTB auction, but also we had the NTB, that's the Nigerian Treasury bills, and the bond calendars are out for the third quarter, and we have a few interesting things. So Caleb is going to discuss that. Caleb, it's good to have you on the show.
Thank you for having me, Will. Good afternoon.
Caleb, if we look at very quickly the Treasury bills calendar there, we see that, um, you know, offers are a bit low for the Treasury bills, and the same can be said for the bonds. Can you say that the government fulfilled maybe their quotas, or they've, filled the deficit, the gap in the 2024 budget, and did not need to borrow more? Is that what we're saying? Because we all know we're currently running the 2024 budget, or is it for the 2025 budget?
Well, thank you. Very interesting question. Because first of all, I think they're running three budgets, but at least let's keep it at two that we're aware of. They're running 2024 and the 2025 budgets concurrently, and they've said they have the power to do that. What we see here from the data that we have is that there's been front loading of the borrowing, so to say, in the first and second quarters of the year. The first quarter, especially, the financial year just started. There was a lot of obligations, there was a lot of uncertainty, and all of that. So they really needed to, borrow heavily in the first quarter. Also, there was a lot of liquidity in the system, and all of that needed to be taken out. That's why you could see that in the first quarter, about 5.1 trillion was raised from treasury bills. In the second quarter, that dropped to around a half of that, and in the third quarter, they intend to borrow even lesser than that. I would say that we know what the deficit is. The deficit is supposed to be around 13 or 15 trillion, 30, between 13 to 15 trillion. And it looks like they've raised most of that already from bonds and treasury bills, and perhaps other sources that we're not privy to. But what I can say for a fact is this: the debt management office is showing reduced appetite, lower appetite for these auctions, and then we're seeing you know lesser and lesser, lower and lower volumes.
Well, how is this low offer, the volumes that we are seeing here, impacting market activities, considering the yield strategy now, which is not so inviting maybe to some investors? Hello, Caleb, can you hear me? Caleb, are you there?
Yeah, yes, I'm here. I can hear you now. I lost you for a bit. Could you take the question again, please?
I was asking that how is this low volume we're seeing in supply for NTB instruments affecting market activities as we speak?
Oh, there's a lot of demand. There's a lot of interest by.
Are you still there?
Yes, I'm here now. A bit of network problem, but can you hear me now?
I can hear you. Go ahead.
Okay, so investors are more or less still interested in these securities. While we may not get interest from the PFAs and maybe FPIs in this NTB space, FPIs are actually, following through with the CBN. We have a lot of FPI interest, and the CBN is meeting those interests for FPIs with higher and better yields. The last CBN OMO auction, saw around a yield of about 20.5% or thereabout for their longest maturity, which was a 260-day maturity. So FPIs are getting, very good rates from the CBN, but the locals are not getting that because the locals can only invest in NTBs. So the NTBs, the DMO is showing less appetite for it, and as a result of that, the volume on offer is lower, and once supply is lower and demand is higher, what happens is that the prices go up, which means the yields come down, and that's exactly what we're seeing.
Okay, but let's just look at what's happening. The NTB, staying on that, there's an auction today. The third quarter calendar kicks off today. We see 250 billion naira on offer. Are we seeing enough investor appetite for that? And also, while I was speaking to you earlier, you mentioned there was an OMO auction that was just announced. How did that play out? 600 billion naira.
Okay, so two things. Number one, for the NTB, you could see that about 300 billion matured, but they're looking to raise only 250 billion. We did see a lot of interest from investors in that space, and we're looking forward to seeing the results. We think it's going to drop from where the last one closed. The last one, which happened 3 weeks ago, closed at around 18.84. We think it's going to close lower than the 17% handle, or around the 17% handle for this one. We expect a significant drop given that the volume is lower. Also, given that the last time there was an auction was about 3 weeks ago, investors have been waiting for these securities, and now they're seeing that the size has reduced. So we should see a significant drop in yields on the, especially on the 1 year paper. The OMO auction, was just recently was announced just this morning at around 11 in the morning. So we haven't gotten the result of that yet. The CBN floated, excuse me, a total of 600 billion across two maturities, 300 billion, 300 billion, 300 billion for 263-day maturity, and 300 billion for, I think, about 260-day maturity. So we will see that result when it comes out, but we think we'll see a lot of FPI interest because, I mean, the Naira has remained strong over the course of the month, and that is strictly because of FPI flows to the market. So the more the FPIs are coming to the market, the more they're getting the yield pickup from the CBN.
Okay, so when we see this yield pick up, is there any possibility that maybe these FPIs, maybe there's sudden shock, external shocks, and we have these foreign investors possibly want to take their money, pull their money out? Would that impact the market so much?
Yes, if the for so the shocks, while the shocks do impact how the FPIs behave, what impacts them mostly is returns. Once they're able to get their returns, on investments within a short possible time, then we see them exiting. Yes, there are cyclical shocks that happen, but I think the market has sort of priced many of those shocks in. Like barring any, say, nuclear war, for example, we will not see any outrageous reaction. We may not see any outrageous reaction. So, but what we're going to see is the FPIs, continue to take interest in these markets.
Okay, but before I let you go, just one more. The DMO launched that FGN savings bonds, offering investors rates up to 16.76 per annum, but this is a decrease from what was offered in June, where rates stood at about 17.12%. Is this the same thing we are seeing for bonds, where the DMO is trying, or the CBN is trying to possibly keep, well, the CBN is keeping interest rates at 27.5%. Is the DMO just still trying to lower debt payment here? Or it's just a trend we'll continue
Yes.
to see
No.
till
Yeah.
the end of the year?
Yes. So it's obvious that the DMO is trying to reduce the borrowing cost of the government, and that's why they're reducing the supply that they have. And like I said, because they seem to be running three budgets concurrently, it appears that there isn't a lot of, and they front loaded most of the fundraising. So the drop in rates for the NGS savings bond is consistent to what we're seeing for the bigger ticket investments, which is the major FGM bonds and the NTB instruments. For the FGM bonds, you need a 50 million, 1,000 to be a partaker of that. Whereas for the savings bond, I think you can buy with as little as 500,000. So that even so, what is happening on the big ticket ones is also happening on the retail side. It's consistent with what the DMO is showing.
Oh, thank you so much, Caleb Alimeyer, Chief Dealer, Providence Bank, for sharing your perspective of Business Incorporated.
Thank you for having me.